Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news. Uncoordinated and capricious White House policy and statements are making the virus emergency much worse. On Wall Street, equities are in free fall. At midday trading, the S&P 500 was down 8.5% and falling. But after lunch, it pared the losses sharply, was down only 4% after the New York Fed announced new $500 billion in short-term bank funding support. The respite was brief, however, and they're currently down almost 8% again in mid-afternoon trade. Overnight, European markets fell more than 11%. Yesterday, Asian markets were down between 1.5% in Shanghai and 4.5% in Tokyo. The ASX 200 dropped 7.4% and the NZX 50 Capital Index dropped 5.4%. These are all enormous moves and represent the end of the equity market bull run that started in 2009. Much of the financial market gyration of the past week doesn't really make any sense when lined up against one another. Something is breaking down in the workings of the financial system, even if it's not totally clear what it is just yet. Bond prices and stock prices were moving together, not in opposite directions as they usually do. The usual safe havens aren't acting that way, and that includes bonds and gold. And there were reports from trading desks that many assets that are normally liquid were freezing up with very low trading levels. This was not only happening with muni bonds and corporate bonds, but curiously also for US Treasury bonds, normally the foundation of the global financial system. And yesterday, the New York Fed engaged in more than $95 billion in overnight repo activity with US Treasuries, equaling the prior day's all-time high. At the same time, they purchased another $37 billion in mortgage-backed securities, a 30% increase over the previous day. All up, that's an all-time record. Liquidity support at these levels indicates extreme stress, and given the US administration's embarrassing missteps, it's likely to get worse and quickly. The growth in liquidity support seems to be as exponential as the rise in the virus in the US. Across the Atlantic, the Policy Committee of the ECB met and left its interest rate settings unchanged, but it did announce a very major increase in its QE program. The latest compilation of COVID-19 data is out. The global tally is now 127,900 of officially confirmed cases, up more than 5,000 from this time yesterday. The trigger to today's shocks is a White House that is flailing with incoherent policy and announcements. This is the time for cooperation and coordination, hallmarks of leadership. But the Americans are acting in the reverse, in the opposite of leadership. The markets sense the vacuum and the vacuous policy. Expect a tide of bankruptcies and close downs. The US Treasury 10-year yield is down to 0.71% and an 11 basis points fall from its official fix yesterday. Gold has tumbled today, another indicator that markets are reacting in weird ways. It is down to $1,590 an ounce, which is a $58 plunge or a 3.5% on the day. That's Bitcoin-like. US oil prices are still very low and have dropped from yesterday, down $1.50 a barrel to just under $31.50 a barrel, and the Brent benchmark is down to $33.50 a barrel. And the Kiwi dollar will start today sharply lower at 61.1 US cents, and a 3% overnight devaluation. It's now at its lowest level since May 2009. On the cross rates, we're actually up to 97.2 Australian cents, a half-cent rise overnight as the Aussie dollar has hurt more than us. And against the euro, we're relatively unchanged at 55.2 euro cents. That means our trade-weighted index is now under 67 and 100 basis points fall overnight. And Bitcoin has been dumped by investors today, down 22% to just on $6,000. It's now below New Zealand $10,000 for the first time since May 2019. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.